All right, traders, I am back again with another video. And in this video today, we had a webinar session today, a members webinar session, and we were talking about how to trade Heikin Ashi candles. So I wasn't going to post this, but then after I watched it for a little while and thought about the content we had, I figured it'd be good to post it so we can show some other traders that are not members how we trade with Heikin Ashi. And also I want to put out another video where I'm going to show you how we really can use Heikin Ashi and Ichimoku together. But in this video, I'm just going to be showing you how to trade using Heikin Ashi candles. So hopefully this stuff helps you out, guys, and you can incorporate it into your everyday trading. So I'm about to get right to it. So let's go right now. All right, guys, welcome to our webinar today. Today's webinar, it says trading Ichimoku with Heikin Ashi, but we're not doing trading Ichimoku with Heikin Ashi. We're doing trading Heikin Ashi candlesticks, period. We're not going to be worried about if it's Ichimoku or not, because I'm going to teach you the aspects of how to trade these candlesticks, these modified candlesticks, and then you can incorporate it any way you decide, because if I show you how to trade a support level, it'll be the same thing as trading Tenkan Kijinsen. Now, there are some other rules that you'll follow, but we'll talk a little bit about Ichimoku. But when I get to the charts, it's not going to be Ichimoku. When I'm showing you examples, it's not going to be Ichimoku. But I'll probably go through and explain a couple of aspects of how to use this with Ichimoku. It's not really hard. All right. So Japanese traders have been credited with introducing many aspects of technical analysis to the trading world. Among the most well-known are candlestick charts, which were developed by a rice trader named Humihisa Homa. The concept of candlestick charting was then introduced to Western traders by Mr. Steve Neeson through his book, Japanese Candlestick Charting Techniques. Candlesticks are now one of the most used charting techniques throughout the world. Japanese traders also are credited with the introduction of another charting technique called Ichimoku Kinko Hayo. Ichimoku was created by Mr. Goichi Hosada, also known as Ichimoku Sanjin. Mr. Hosada worked as a general manager for sales of the Mayako newspaper. In 1936, he released Ichimoku under the name Ichimoku Sanjin. In 1969, Ichimoku Sanjin wrote a book consisting of 7 volumes, and it is said that it's almost impossible to understand everything in theory. So furthermore, the original books and lectures are all in Japanese, make it even harder for traders to learn, especially Western traders. In Japan, it's supported by overseas fund managers and is one of the most popular technical indicators among individual investors. Ichimoku has been gaining popularity among Western traders, but there are still many aspects of Ichimoku that are not understood. Finally, Japanese rice trader Munisa Homa enhanced his creation of the candlestick chart. So he created the candlestick chart, but he enhanced it with the introduction of the Heikin Ashi candlesticks. All right. So Heikin Ashi, also known as the modified candlesticks, is a visual trending charting technique based on the alteration of the regular open, high, low, and the close values. In Japanese, Heikin means average or balance, and Ashi means foot or bar. So Heikin Ashi gives you a visual asset at one glance, the trend direction and its strength. So you can see on this chart how nice this looks and how clean this looks. It gives you that one glance look of the market, and you know what the trend is, okay? The visual clearness of the Heikin Ashi chart helps to filter out confusing market noise compared to classic candle charts. This results in faster analysis and clearer decision making. So just by looking at the candlestick chart created with the Heikin Ashi candles, you get a good idea of the market bias and strength just like you would Ichimoku. So you could look at this at one glance and pretty much see. So everything that you see that the Japanese have pretty much done, it's like one glance gives you the opportunity to understand what the market is doing, what you see the market doing. All right. So the trend can be determined by the size of the candle and the color of the candle, and also the wicks of the candle. So you see the size of the candle, the colors of the candle. So the green candles, and you can change these any way that you want, but normally green and red represent bullish and bearish. So the green would represent a bullish candle, and the bearish would represent the red candles. All right. In a bullish trend, bullish Heikin Ashi candlesticks contain these big green bodies with the long upper wicks and no lower wicks, as you can see. We don't really want to see the lower wicks. All right, and we'll talk about the trading signals because that involves knowing and understanding these wicks and so forth. So if you see Heikin Ashi candles with the wick on the bottom for bullish candles, that represents possible weakness in the market. All right, and it's also a weaker signal. And then when we're looking in the opposite direction, we'll talk about that also. So you could see, on the other hand, when the trend is bearish, all right, so we have all bearish candles. They'll contain the bigger red bodies, lower wicks, and no upper wicks until here the trend started to get weaker and then weaker and then weaker. But this one showed this looked like it was going to still be a strong trend because there was no wick on the top. But you could see once we had that, the market did get weak. And also things you got to look out for are support and resistance levels. Okay. So those are going to be still big aspects of your trading. So everything that we teach or that I've been teaching you, don't eliminate, add this to it. Don't eliminate the level. All right. Now, signal and trigger may be different when because we're not looking at the same candlesticks. So we'll talk about signal and trigger in a little bit, but you're going to always still do level. You don't trade in the air. You trade on a level. Okay. So on the other hand, when the trend is bearish, you see these candles, as I said, but now we're going to look at how the market shows you how these candles are calculated. So the Heikin Ashi candle represents the average price or the average movement of the price. All right. So it's the average price that you're seeing per candle and overall average price of this chart. All right. The Heikin Ashi candlestick uses information from the previous candlestick to determine the current candlestick open. All right. So the Heikin Ashi open is determined by the average of the previous candlestick open and close price. So this open and close price will determine the next candle open. All right. This concept is what smooths out the price action and also slows down the market, helping to eliminate the whipsaws and false trading signals. So this is the current candle. The next candle is going to use this information. That's why these are called average bars, are modified. They're average bars, really, because the next candle is going to open in the middle of this body, the average of this body. It's not the top and the bottom. It's the average body open there. So the average body open here. It's not actually the true price either of the candle, of the market. It's the average price of these candles. All right. So the market actually could be, here's where this is showing the market is, or where it opened. It actually could have opened right here. And the market could now actually be up here. Now, sometime it's going to be pretty close and sometime it might not be, depending on what happens. All right. So Heikin Ashi candles with very small bodies or no bodies at all, and the wicks protruding on both ends, they represent dojis, just like your regular candlesticks. So the Heikin Ashi doji represents indecision, impossible reversal, same thing as what we always know. All right. It lets you know the strength of the trend has weakened and market participants are unsure of the next move. This is vital for you at support and resistance level. It's not vital for you in open air. but it's vital for you at support and resistance levels. It's vital for you at Tinkinson. It's vital for you at Kijinson, okay? Because that's where you get your correction at Kijinson or Tinkinson. Then you would trade back to the downside following the direction of your Ichimoku crossover or so forth. We'll look at some charts and talk about using it with Ichimoku, but you could see here you had your indecision candles, and then what happens next? The market just drops after that. All right. And then in this case, right here, we have dojis again. You could see two dojis right here. This one has a little bit bigger of a body, but they both have protruding wicks on both sides, which we really don't want to be seeing, all right, when we're trading to determine a direction. That just is telling us it's indecision. We do want to see indecision at certain points of the market, like support and resistance levels. So when we get that at this level, what happens to the market? The market moved higher, all right, because you found a support level. As you could see, this is a support level down here. Indecision developed, market moved higher. Nothing different than what we've been always talking about, right? Nothing really different. Just what you're going to have now is less candles to look at, as far as like less candle formations, all right? And now you'll have clear cut when to do, what to do, how to do, why to do. Clear cut. So let's look at the trading rules. So rule 1, green candle is a buy, red candle is a sell, period. But you don't just jump in because you get a green or red candle. There's strengths of these candles. So the next rule is the green candle with the upper wick equals a strong buy. All right. A red candle with a lower wick equals a strong sell. So if we're moving high, if we're moving up, we want to see wicks on the upper side. If we're moving down, we want to see wicks on the lower side. When we start to move up and we see wicks on the lower side, that shows a little bit of weakness. So rule 3, green candles with lower wicks, as I just said, represent weak buys. Doesn't mean you can't buy. It means it's a weaker buy than what we would have with one with no wick on the bottom, on the lower side. And then the red candle with the upper wick means a weak sell. Candles that are shorter than the previous day means weakness and possible change coming soon. That's when you should start to look at your trade, especially look at your area where you're headed to and where you are. You may start to want to take some profit off the table or monitor your trade a little bit closer. And then finally, the doji or the indecision candle. I don't call them dojis. I just call them indecision candles. It means a possible change of trend. And that's what we look for to get into the market. Now, that's not how we get in. We get in the market based off of these 2 and 3 rules. All right. Really get in on 2 and 3 with a strong buy or a strong buy, strong sell, or a weak buy, weak sell. All right. And we'll look at some of those on the charts. So looking at the daily time frame at a support level, and if you guys are asking me questions, I can't see them right now. I'll go back and look at those and we'll discuss anything that I talked about here. And then we'll go on to the charts. But what you see right now is a daily time frame at a support level. All right. So what's the next thing we're going to do? This is a daily time frame chart at the support level. Next, we're going to go to the 4-hour time frame. We want to drop down. Don't go to the hourly. All right. So from the daily, you want to go to the 4-hour. If you're trading 4-hour charts, you want to go to the 1 hour. This is going to help you to cut back on some of that price. So when the market's moving, I told you that the price is not the exact same. Sometimes these candles will get you in late and they'll get you out late. Well, the problem with that is we fix that by going to the lower time frame, the 4-hour. We don't want to go much lower than that. All right. So that average price, now we're reducing that entry. So if I was going to enter on the daily here, probably the 4-hour would be down here, which would be closer probably to what the price is or whatever. Let's go to the 4-hour chart. When we see the 4-hour chart, you don't do anything. You sit and wait. Okay. You know, you have your level. Here's your level that you want to get into the trade. So When you're on the 4-hour time frame, just wait for a confirmed entry. You don't want to trade the rejection or indecision candle because that has not confirmed the reversal. This does not confirm the reversal. You want to wait for a green candle with no lower wick. Now, this is an indecision candle. You don't want that candle. All right, so you're not going to enter here. So far, this tells you no entry. So if you enter, why are you entering the market? Long. Right? Why are you entering the market? Long. You broke rules. You're not listening. Why did you enter the market here? Long. You broke rules. You're not listening. This is your entry right here. Either at this market close, or what you actually could do best is put an entry market order, or you could put a buy stop order at this level. Okay. Now, depending, the market may be higher than this point, the true market. So you're just going to want to put a market order to get into the market. Now, when I say higher, it may be a few pips higher at this point. It's not going to be like up here. All right. And usually at this point where it hasn't moved much, it's going to be pretty relatively close to that price. And then once you enter the market here, you're good to go. Your stop loss is down here. And then what happens for you? Ba-boom. Good trade. All right, the trade goes your way. Let's look at resistance. So here's the daily chart. The market comes up to this resistance point. Basically, a lot of traders like to call this a double top. It's a little short for a double top, but we'll look at this as a double top. All right, we're going to stay on the daily time frame this time to trade it, okay? And then when we look at that, the next candle, we want to decide if we're going to get into the market because we're waiting for a reversal signal, a full-blown entry signal to reverse. You're not getting, like on this, you're going to get a indecision signal, but not really a reversal signal, just an indecision signal. And then you're going to get a entry signal. All right. But when we trade regular candlesticks, we could get a rejection, which is a reversal signal. All right. And then we could get an entry signal. Here you're going to get an indecision signal more than likely, and then an entry signal. So you got an indecision candle. That's not an entry signal to go long. I mean short. All right. It's not even an entry. It's not even a signal to go long. So if you're not in the market at this point, you don't have a reason to be in the market at this point. Unless you're just a bad trader and you just decide you want to do whatever you want to do and don't care about what the market or the charts telling you. So you wait and see if you could get a signal. The next candle gives you a weak sell signal, and it's weak because we got a wick on the upper top part here. All right. And then also, once this candle closes, you're in the trade, or you put your entry there. Also think about it. The next candle is going to open in the middle of the body here. Okay. And then, so what happens here on this weak sell signal? Because we didn't get a rejection or anything. We got an indecision and then a signal. The market decided to drop, and you can follow that cleanly. Now you could see bigger candles started developing, then they started getting smaller, then they turn colors. You don't get out the market here. All right. There was no true sign of a market moving higher with you got an indecision candle here. All right. Yes, there was here. And you probably could have taken profit there because you're on a daily time frame. You made big profit at that point and then waited for the market to change again. So let's now do the same trade. This is the daily time frame. And we're going to look at this on the 4-hour time frame. So now this is the 4-hour time frame. This was the daily time frame. All right. Same level. Now we're on the 4-hour time frame. So what we did now, when the candle hit the level, we went to the 4-hour time frame. All right. So now we want to trade this the same way. That's a weak sell signal, and you could enter the market there. Your stop loss is lost here because you're going to be slightly above this level, which I don't like because I want to make sure where the total price action is. And at this point, if you got stopped out, it's for minor losses. All right. So this is a weak sell signal. This is a strong sell signal. There's no upper wick on it. Now, it could be strong at this point and get weak later and never go any farther. But you do the chart or the entry based off of what it says. So you could have entered on this weak signal, but the next candle was a strong signal. And then what happens with the market? We get stopped out. Psych, no, we didn't get stopped out. What happened with the market was you got more indecision. And then the market dropped. And you could see once it went. There was no thinking about getting out of your trade here. With regular candles, you may have had some areas in here where it looked like you get scared because you see that candle and you pay too much attention to price at one point. You don't pay attention to the whole picture. A lot of traders all they see is the movement of the market at that point. They don't see the whole piece of pie. This is making you see the whole piece of pie. You can't help it. All right. And then here you get indecision. Why would you get out the trade at this point? And then it keeps dropping. Now I could see if you got out here in this area. All right. But then how do we get back in? I'm going to go ahead and show you. Right here is these. What are these? Fractal levels. You could still trade your fractal bounce trades. So we'll look at that more on a live chart. So let's go to the live charts. Let me see what kind of questions you guys may have, and then we'll look at these live charts. Let me go to my charts. I don't want that on the bottom. I'm going to just use this. Now, let me see if I had any questions. So I'm going to go backwards. I'm going to go back and then I'm going to move up. So I'm just looking at questions for a second. Hold on. Boom, boom, boom. All right. So you guys were talking about the picture freezing or something. So what about a buy stop above the indecision candle wick? So I should have probably answered that for you when I told you that you don't enter it like that. You wait for the entry, be it a weak entry or a strong entry. So be it a weak buy or a weak sell, you wait for that, or a strong buy or strong sell. You don't play the indecision candle. The indecision candle is just there for us to see that we can wait for the market. Now we could do that, but a lot of times you're not going to always get the opportunity to get into the market that way. So you just want to make sure you get the candle, and I'll show you some of those. Do I need Williams % to confirm? No, you don't need it to confirm, but we could use it to confirm. And I'm not doing it on here because I want you to be independent of things. I want you to see the market and have confidence in what you're doing. We'll add Ichimoku another day. We'll have another session when we do our weekly session. We'll talk about, I'll use Heikin Ashi probably on Sunday, and I'll use it with Williams %, and I'll talk about it more at that point. Setting fractals will still be effective. Same thing. The market's you could see these fractals. It's still got pretty much the same thing. And I probably must think they're the same as the regular candle levels. All right. Divergence still plays a role in trading. Nothing changes, guys. You're not changing anything. You're changing the candlesticks, and that's it. We're not changing divergence. We're not changing Williams %. We're not, that's all still stuff all works still. Okay, so there. Now I'm going to show you some of the charts. So I'm going to show you basically, I'm looking at some opportunities and I have a mark. So this is one of them. The markets, I'm looking on daily time frame at these markets right now. So I don't have a lot of opportunities based on daily. I haven't really looked at them at the lower time frame, which I will go 4 hour. I'll look at the markets and start looking for it. The thing is, because guys, when you do your analysis, basically when you're going to do some analysis, so I'm looking at this Swiss franc yen chart. Let's go to another chart. When I'm doing my analysis, I'm looking for levels where the market's going to be showing me support and resistance, like this level here. All right. So I wait for the market to get back to those levels. So that's why when I mark a chart, if I don't have any levels really that I'm looking at, there's nothing for me to trade. Okay. So I wait for those levels. Now you're going to find out we're having the Traders Vibe live show on Friday, and you'll see professional traders telling you the same thing I'm telling you. They're going to tell you they don't just trade thin air, they trade levels. And the one guy that's coming on Friday has been a professional trader for 34 years, trading millions of dollars. All right. So if anybody can tell you, he can tell you. But let's still look at these fractal bounce opportunities here. And it's hard to go. I can't go back with this because it doesn't allow me to back test really, unless I put it back at candles. But I'm going to do it just like this. So what we're going to look at, I'm showing you how to trade the fractal still. Okay. So this fractal level, you could trade fractal breaks or bounces. At this point, we're going to look at the bounces. You could see what happened there, right? So if I stayed on the daily time frame, this wouldn't be my entry. This would be my entry right here. And these are both weaker entries, but you could see the market's still going to the downside. They're weaker because they have a little wick on top, but then this is a strong sell. Weaker sells, I would still get into the market. Strong sell, and the market drops. Now, when you look at that, in order to get a better entry than this, I still go to the 4 hour time frame. We haven't done anything different. We're just saying how to get into the market different with these candles. So we're still going back to the fractal. And all we're saying is now at the fractal, even with this rejection, we say that's not really considered a rejection candle. We're waiting for indecision and then entry, or even from what you would say this bullish candle right to the bearish candle. And it's not going to be the first bear candle because this is almost an indecision candle, but being that the wick is longer, we can enter. It's longer on the bottom. All right. Get my screen to full mode, screen mode. Mine's in full mode. See, I'm using the full screen. I don't know what's up with yours. If you guys could see it full screen. Like if I do that, does that change anything? Because all I did was take the chat thing off for me. All right, so now I'm going to go back on this trade. So we're going to go back. I'm going to show you. Let me show you if we wanted. Now we know that when the market gets up to this level, we want to go to the 4 hour to get into the entry. So what we're going to do is go to the 4 hour chart and try to find the entry that we could get better than these entries. All right. And when we go to the 4 hour, right where that was, so where that daily candle hit that level, you could see that daily candle hit the level. We still had a little bit of time to go. Don't enter the market there. This would be the first true entry. And then the rest of them, these were not entries. But then you got an entry here and here. So you could enter here and here, but this was the first entry. This was not an entry, guys. You know that. So don't try to cheat when you're trading for real by yourself and say, well, it's red. I'm going to take the trade anyway. No. You're breaking the rules. The wick was too big. So this wick is much smaller. The one on the bottom is bigger. That's an entry, a weak entry. And you can see it was weak because look what happened with the market. It didn't do much. And then you got another entry that wasn't weak. It was supposedly a strong entry, but the candle was small, which means the market wasn't super strong. And then it slowly trended down. And then you could see your trade was profitable. You never were in doubt. All right. Now, if you're impatient and don't wait for the market to get to the level, here's what happens to you. You get a strong sell entry, and then you get stopped out because you're impatient, because you're not trading the level, because you're trying to rush the market. You're trying to guess where it's going. You're trying to get the earliest entry you can because you're being greedy. You're not paying attention to the rules. You're not trading the level. You're not listening to anything that we talk about. So you can't do that. You have to pay attention to what we talk about, how we trade these, and how we trade always. Level first, then start thinking about everything else. Level first, then start thinking about everything else. Find the level, find the trade. All right? Don't find the trade. First, find the level, find the trade. 4-hour time frame, we got a better entry, first entry right there. And it's pretty much right at this level, maybe a little bit higher, but pretty much right at the level. Definitely, I put my stop loss up here, starting out. All right, and then I just follow down. You're really safe with these candles as far as stop loss also. You know why? It's the average price. So this high point value is usually pretty much safe. Now you see it got taken out here, but throughout this whole thing, that average price always held true at the top. All right. So once the market finally gets moving pretty good, you would have got stopped out here. All right. To get back in, the market gives you all this before it ever takes you out again. So that top level previous candle high is pretty good for a stop loss. And that's why you could trust these upper levels, but you can't trust the market yet, because even looking at that, you broke this first fractal that was in between, but then because this fractal here shouldn't have been one that we really paid attention to, because it didn't give you a drop and then a move. It just was inside the range, the trend right here. All right, so you could tell when it broke that fractal, then the market moved higher still. You finally broke these levels over here. So if you wait for your first fractal break, this was a strong signal on a fractal break. You had no signals on a fractal break here. So none of these really broke the fractal. This one was the only one, like all these wicks. Let me show you what I'm talking about. I don't know if people understand. This level right here was never broken by any of these candles, except this one. That's your fractal break right there. None of these are your fractal breaks. All right. Even this one wasn't. This is a strong sell right there. But then the market moves against us a little bit. And you definitely don't want to put your stop loss right there on that tiny candle. All right, so you start off up here. And then you could see that fractal break trade. And it works for you. Another fractal break trade. This one is different. Because the thing about this, it's a strong sell signal on a big candle. The bigger the candle, the better. All right. And then you can see what happens. So let me look at some of these others. So what I'm looking at also, let me go back to the daily. Any questions? No, you don't put your order at the end of the wick. You put it at the body. So if you got to sell, you want to sell there, but the market may be lower than this already. So you just put a market order at the current level once this candle closes. The next candle is going to open in the middle of the body right here. And price might be still above that level. You're going to put your sell order there. If the market's lower than that, you're just going to enter the market with an entry, with a market order. But you could put a sell stop right here. All right, most of the time the market will be above that level. These are average. It's going to give you a little bit better entry. They're a little late. It's not giving you a better entry. That's why we go to the 4-hour time frame. It's giving you more closer to the market entry, cutting out some of the distance of your stop loss. All right, because maybe on the daily time frame, instead of entering the market here, we would have had to wait till this level, which is pretty significant in pips. All right. So let's go back to let me get rid of some of this stuff. Let's go back to the charts on the daily time frame. So then we saw this right here. I'm going to go to your next fractal level, which would be right here. And I'm going to talk about both entries. Now you had an entry here. So let's go back and look at that entry. This was the first entry. All right. The fractal never was broken. We still can trade the bounce off of it twice. This was the first entry. You probably didn't expect it to come back again, but do expect that because it could. But let me go backwards and show you when we go to the 4-hour time frame. So this candle, I'm pretty much going to say this candle hit. I go to the 4-hour, and I could just stay on the 4-hour as long as I have my daily levels. And you could see the 4-hour didn't give me an entry until right there. So I entered the market here, right there. And the market gave me some good profit. Then it came back. All right, at that point, what was this? That's over 100 pips. All right. And then we go back to this point. We're going to go to the daily again. The market comes back for another fractal bounce. Now look. Now this is where it came back to the fractal level. It touched here. So let's start from there. Where it touched was right there. So that daily opened up and it touched right here. We didn't have a sell signal yet. And we didn't have one here. That's an indecision. We got a sell signal right here. Strong sell. So then our stop loss would be above this level. All right, so put it a little bit above. And you could see the market came back up, triggered you out. Okay. Got stopped out. You probably got stopped out on this. Even, I don't care how high you went. You got stopped out. I'm probably stopped out there too. Stay with the trade. The next entry, you're thinking this is a weak signal. You could enter the market here, but definitely this was. Now on this point, so here's what you should be thinking. Is the market going to show me, I got stopped out on this candle. Is the market going to show me that this is going to break this support and resistance level? Is it going to break this resistance level and continue a bullish trend? The bullish market will have to show me with the next candle. The next candle does not show you that. The next candle shows you that the market participants are bearish at this point. And then it shows you even stronger here. You should definitely be in at this point. You might be indecisive here because you got stopped out. That's part of trading psychology. But our reality, you should have entered here, but you probably didn't have the mindset to enter there. So you wait, and you definitely should take this trade. You got stopped out for a little bit of profit right here. So let's look at that real quick. Let's say you take this entry and you get stopped out for a good 30, 45 pips or so. Okay. You're going to make that right back in a second if you take the entries as they're shown. I'm going to just go to where you can't even think of getting out of the market anywhere in here. Does it show you anywhere where you should possibly think about getting out of the market? No. Indecision right here. Don't get out the market. Maybe you think about getting out here. If you thought about getting out there, you made your 46 back plus 153, but I wouldn't have gotten out there. I want to see the next candle tell me to get out, and it doesn't. And then again, you don't get a sign to get out the market. The first sign of getting out the market would be here, and then you say, I'm out here, which would have given you 262 pips after you lost 46, 45, 44, whatever. You would have made 220 of it back on the second trade that you were afraid to get into. Okay. And you were afraid because your psychology is not right, because you got stopped out and you don't trust what you see. You can't make 100% perfect trade. It just has to be your rules. And if this was your rule, you're stopped out, you're back in. Okay? It has to be your rule. So that's it. Let me see any questions. I don't like MT4. And the Heikin Ashi on there is very ugly. There might be some newer ones since I have been using MT4, but back then, when I used to use it way back, I didn't like the Heikin Ashi charts back then. And I've never used MT4 since a long time now. So yeah, we talked about the limit order. You put it at the body. All right. I think I got everybody's questions. So let's move. So what we're looking at, again, let's go to the daily. So I'm just showing you that you still have these fractal bounces, right? Then we're going to go back here. I'm going to mark this fractal. I would have thought when I saw this on the daily that it was going to be broken to the upside, because usually this is a very strong buy candle and the market still moved higher. I would have definitely thought this wasn't going to work out, but I wouldn't have left it. I would have said, oh, this is probably going to break because you had this. But we went to these candles. We changed to the 4 hour right here. Because, guys, what are we trading right here? A fractal bounce. We're still trading the same things, and I'm just showing you how to now go from the daily, because you're looking at the daily fractal level. Everything's daily, and then entry is 4 hour. Then you go here. So when I got that signal, nothing on the day on the 4 hour told me to enter this market ever yet. Nothing. Now, this is close, but I wouldn't wait. I wouldn't go on that such a small body. And then you don't got a signal here. So you didn't get a signal yet, and you probably think it's breaking. This is a sell signal right there. And your stop loss is up here, and you don't lose this trade at all. And then if you were not confident, here's a sell signal when it broke back down the other side of the zone, because you weren't confident here because it went through the zone. So you didn't think it was going to work, but now you see which way the market's going. Breaks here, you enter the market here. You're losing the market for 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 10 4 hour candles. All right. 40 hours of losing the market right there. But you should have never got out the market. Then your whole week of being patient finally gives you big profit. Okay. See how these can help you, especially when we go down to that lower time frame. Now, if we just stay on the daily time frame right here, I think we may be having some, like if you just stay on the daily time frame, you could enter the market short right here with a stop loss up here. All right, this is more of an indecision. This is more of an entry sell, a weak sell. So you didn't have that same thing on the 4 hour. You just entered here, stop loss up here, market drops way down here. This trade alone, just looking at that, if you would have entered there, it dropped all the way down to like 251. And it never gave you a sign of getting out. Now, if you waited for the daily signal to get you out of the market, you only made 118 pips. All right, when you look at levels where you could get out of the market, I'd have to see if there was something where I could have got out the market. But 250 something pips, I'm not going to let come all the way back to 118 or whatever. All right. So you got to know how to slice up your trade, or else just take that profit. Be happy. Okay. So I've showed you the fractal bounce trades. There's no difference in anything that we're talking about or doing. Just the difference is the candles different. So different price action, basically. How possible for you to enter the sell trade after the indecision candle? Are the candles formed before the end of the day? No, they're formed at the end of the day. How possible is it for me to enter the sell trade after the indecision candle? It all depends what the next candle is. You're not trading that indecision candle. Do not trade the indecision candle. Trade the candle that tells you strong, weak or strong sell, weak or strong short. Do not trade the indecision candle thinking, well, I got indecision, I'll put an entry short above the indecision candle or below the indecision candle. That's not the way it goes. All right, the way it goes. So that what you're wanting to do is this. What you guys are trying to mention to do is something like this. So basically, let me see a good spot. I want to see a good spot where I could really show you. Okay, so I see like this right here. Let's say this is indecision right here. You're going to sell. We hit resistance up here. So you guys say we hit resistance. You want to do this. You want to put your sell there. All right. Impatience, that is. This is the true sell entry there. And then here's a strong sell right there. This sell right here was in line with that end of that wick right there. This sell right there. That's the sell signal. This is not a sell signal. This is not a sell signal. This is the first sell signal. This is the first strong sell signal. And it remains strong. And then we get a lot of indecision, but the market slowly drops. All right. So if you probably go back and try to find a way to trade these indecision candles, you're going to get stopped out many times when you see that you just don't follow the rules. Follow the rules. The best thing is to wait, not on indecision, wait on signal to go short. Signal to go short, signal to go short, signal to do nothing, signal to do nothing, signal to do nothing, signal to go short, signal to go short, long signal, signal to do nothing, short. Basic indecision, too small of a candle, but it's a bear candle. All indecision, indecision. Small bull candle, that's not going to tell me to go long here because there's no strength. And also I'm at a no level. So those things are what you need to pay attention to. How to move a trailing stop? Well, just basically you could follow the wicks, but I like to let my trades run a little bit. I don't want to be too tight on the market and like, okay, so let's look at this point. Let's say you got in the market. Let's say you started with your stop loss here because you were getting in the market on this entry right there. This is indecision, right? This is indecision, right? That's a true entry right there. So let's say you got into the market right there. Now, these candles are so small that I would not move my candle, my stop loss up to those because it's very tight. So I would stay down here at least. But now as you get a bigger candle, if you get a candle like this and you're up here with your trade, definitely I'm going to put my stop loss there because the market opens in the middle. All right. And then I can keep moving with the candles if I decide to. I like to give the market room to move and breathe. And the more profit I make, then maybe I can tighten it up. To start out with, I want to get some profit, but now I can tighten it up. And you can see every time it opens, I could still trade behind the candle. And then finally we get here. I can stay here. And then if I get super tight, which would mean I get here, I'd get stopped out right here. And then the market moves a little bit higher off of the indecision, a little bit higher, retraces back to the fractal level right here. You get into the market right there. That's indecision. That's not. The wick is bigger up top. So you could get into the buy signal right here off of this fractal bounce right here. See this fractal? Right there is the top of the fractal level. The market drops right back to it. And then it gives you a buy entry right there. You definitely want to keep your stop loss at this point right here, because these are too tight. But then now you get a big candle, so you can now follow a little bit tighter. I mean, a little bit farther distance. Big candle, you can stay with it. Then you get this candle, you can move here. Then on this candle, you know you're getting close to the market stopping. So you made some profit here, and then it takes you out. See, are we good with that? And they're good with the stop losses because they're mid candles. They're the average of the price. So extremes will stop you out. But if the market remains average, you're going to be good. But if the market all of a sudden has an extreme move, you'll probably get stopped out. And a lot of that could be news. So you need to make sure of that. All right, because news could get you stopped out because you get a spike or whatever. Any kind of spikes could get you stopped out because it moves from the norm at that point. It moves from the average. All right. So we looked at the fractals. Let's look at the markets now. What trades am I looking at with these? I'm currently looking at this Swiss franc yen trade. This is the daily time frame. So now we could look at the 4 hour and stay on it. There is no 4 hour signal yet. Now there was a 4 hour sell here. But see, I like to be up in the zone. We are in the zone. If I did take this sell, I would have had to put my stop loss above the zone because I already have the level. I always going to play the zone first. So now I want to see a sell signal. We don't have any yet. But see, these candles now getting smaller. So if this candle stays this size, and what time does this candle close? It has another 3 hours to go. If it doesn't get any bigger, let's say it stays that size, the next candle is going to open right here. It's getting weaker. All right. Then we probably start to be able to see a sell signal developing shortly afterwards. I would sell the market with a stop loss above. Now, if I get a good sell signal and I put a stop loss above this wick, that's cool. Let me go to the daily real quick, see what that, because see, the thing is though, the problem with me for that is this. I based it off of this zone here. My thing would be you probably want to be above this level because price been here before. You can see what does price always do that I tell you guys all the time. Never put your stop loss right on the point. Because look what the market likes to do, come right back to the point, almost to the identical point. So this is the highest point on this area. So I would be above that level. If I'm going to be above that level, I might as well be above the zone. But at most, at minimum, you want to be here above this level because you're above these two levels. All right. And that's the average highs of of that time. So now when we look at the daily, if this daily candle stays as is, the next candle is going to open right there. And then they probably get smaller, and then you get your sell signal. Is this a sell signal, class? Yes or no? Anybody? I'll wait for one answer. Somebody said no. What does anybody else say? Does anybody say yes, that's a sell signal? It's an indecision, right? It's no sell signal. Is this a sell signal? This candle here, sell or no, or indecision? Okay, yes, it's a sell signal. There you go. See how plain and simple that is? So let's go here. Is this a buy signal? Because I'm coming off of this fractal right here, right there. Is this a buy signal? Anybody? See, I like to move on once I know everyone knows. So far, everyone doesn't know because everybody answered this different. People said this is not a buy signal. This is a buy signal. You're bouncing off of this fractal. This is a buy signal. It has a lower wick. It's a weak buy signal. All right. This wouldn't be a buy signal, but this one is. It's not a strong buy, right? It's a buy signal. It's a weak one. These two are not buy signals. So when you're trading this level, you don't get in the market here. There's no psychological thing that could make you get into this market long right here, right? So your trading mentality and focus is intact. There's nothing to make you get in the market here again. Your trading mentality and philosophy and psychology is all intact. You don't have to worry. You have no issues and you're not thinking about getting into that market yet. You see this. There's nothing to contemplate. There's nothing to think about. Now, here's how you could destroy yourself. This is an entry to get into the market. Some traders may say, well, it's a weak entry. I'm not getting into the market. Okay, then don't. Wait for this one way up here. Too late. Get into the market on the signal, even if it is weak, because you got your level and you can play your stop loss. You don't have much of a loss. All right. And then the market goes your way, unless you want to wait for the strong signal, which would be here. Each candle got a little bigger and the wicks on top got a little bit higher. Strong signals. This is a big candle, good signals. Going into the resistance point, when I see smaller candles developing, I probably pretty much know the market's not going to break that level. All right. I see smaller candles develop. I probably know the market's not going to break that level. So we're on the Swiss franc yen. I'm looking to short this, but I'm going to the 4-hour time frame and waiting for my entry. I don't have it yet, but you know what, guys? When I get that on the 4-hour time frame, I'm going to post it and I'm going to send it via email and into the chat room, and I'll try to post a picture with it. But I'll tell you the entry. But what's going to happen is that entry is going to be then when that candle develops. So I'm watching this after every 4-hour candle. I don't have to look at these again till another 3 hours, right? So I don't have to look at this chart again till 5 o'clock. Is there a reason for me to look at this again till 5 o'clock? Even at 5 o'clock, I'm not going to have a trade. So probably 9 o'clock tonight will be the time to look at this. 5 o'clock, the next candle is going to open right here. And then it may close as a sell signal. So you don't even really have to worry about this till 9 o'clock. You're not getting a sell at least till 9 o'clock, at least. So I already know that. Unless this candle all of a sudden gives me a big indecision, I still wouldn't be able to get into the market next candle. The only thing it could do would be a strong sell to the downside. It wouldn't be able to change anything for me right now. I know that pretty much 9 o'clock is the earliest I probably could get into the trade on the 4-hour time frame. So that's what we're looking at, Swiss franc yen. I like this trade setup too. I'm also looking at, I believe, the euro pound. I think I'm late on this one. I'm going to go to the daily time frame. I'm looking at this fractal bounce right here. It hasn't developed yet. So I'm looking to bounce off of this level for a long opportunity. Go to the 4-hour. The 4-hour has already given me an entry. This is a weak sell. This is an entry because it's got a long wick. Even though it has a pretty nice wick on the bottom, the problem is it's not as long as this wick, so it's not indecision. Indecision would be more so when they're like, okay, so this would be an indecision, guys. So let me show the difference. Even though this wick up top is bigger, this body is very small. This body's not very small. All these are indecision. All of these. This would be closer to a more of an entry long. I wouldn't say don't take that one. This is a strong sell, a strong buy. This is a weak buy. This is a weak buy and another weak buy and a weak buy. Then the market's correcting. Let's look at this 4-hour chart, see if we could get because we don't want the market to close lower than this. We want to stay in this area and look for a long off of the fractal bounce based off of the daily. All right, trending market. So if it's going to continue higher, it's bouncing off of these levels, this level. So if I stay with the daily, there's no way we have a trade yet. And I'm patient right here. Daily will get me in later though. So I could stay with the daily. If I wait for a daily, indecision might be okay, but a daily long, probably I'm getting in much higher than I want to. But still, it's still safe. So you could just stay on the daily and wait for the entry. Put your stop loss down here. Bigger stop loss, bigger risk. As far as size, bigger risk. But as far as probability, higher probability. Because now you're waiting for that daily. Then you get that daily signal long with you're more than likely the medium, the average level for the stop loss. All right, so you're good. And I think you would get a good entry. You just might get bigger risk size, but higher probability. Understand what I'm saying? 4 hour may get you stuck one time or so, but it's a lot of times it's going to get you pretty good and get you in the market. But if you just stay with the daily, you probably get a not as good of an entry. I've looked at one point where I think I showed you guys. The one point was 52 pip difference from the daily time frame to the 4 hour time frame chart. The 4 hour time frame chart had a 52 pip difference. So I had 52 pips less of a stop loss when I got in with the 4 hour as opposed to the daily. But I got to end both trades. But the only thing is that stop loss was much bigger for the daily, 52 pips bigger. That's big for some folks, especially if you're using a standard lot. I never use standards. I use minis because I can make them into standards and I can cut them in half. All right, so everything clear there? So that's what I'm looking for on this euro pound. Let's go to the next. I'm just looking at the ones I'm looking at, this pound Swiss franc. Same thing here. We're looking at this fractal bounce. You can see the big zone. I think we got a little bit of time here. I don't think we'll see this in the next day. Might not even see this week. And I wouldn't go to the 4 hour yet on this. Okay. So I would look at this. Let's go. Oops, I don't need to do that. What am I doing? Let's go 4 hour. So 4 hours showed you a sell here. Even though this wick, it has a wick, it's not that big of a wick, and it's not as big as this wick, and the body's big. Okay. Now you don't want the wick to be getting too much bigger. So you had a sell signal here. I don't like it because like I definitely have to put my stop loss here, but I really like to start out here because I think the market could move higher. Now, so the next entry might be better. Daily hasn't shown you a short yet. Okay. So I kind of want daily body to get up into the zone or up to the level, and then I could look over. And these candles are going to be best on these time frames, even maybe the 1 hour. But the lower you get, the harder it is, especially with stop losses, because your candles are a little smaller, but you're still playing that average. But any kind of move, real good move, could spike you out. And everything's still the same. The higher time frames are better. Traders who love weekly and monthly charts, these will work great for you. You're still going to just follow what you do. But this is what I'm looking at, the pound Swiss franc. Don't really have the opportunity yet, but you can see the zone. You should have your zones drawn in so you can look at this also. Let's go to the next. I'm looking at pound New Zealand dollar here. Let me make sure why I'm looking at this one, because I looked at this earlier. I'm not really looking at this. I don't know why I put this on my chart. I was doing some analysis with this one. More so, you probably wait for this fractal level. Actually, no, I'm sorry, that fractal's level right there. So more so, if you're going to look for this trade, you didn't even get out of this zone really. So it's hard to trade this. Actually, you did. Yep, you got out of it. So you would be looking for that short signal here in this area because the market's bearish. I will put Ichimoku on the end at the end and show you a couple of that. But basically, you could see we just broke out of the zone and now we're right into it. So this is the quickness of getting into the market again off of the fractal bounce. All right. And let me see what it's doing with this little fractal right here. See what it's holding on that level, but I made this whole zone. It broke through this level and it's holding right there so far. If it closes like that, what's going to happen is you're going to open at the midpoint. All right. So always remember, you're going to open at the midpoint of the previous candle body. So that gives you some kind of idea of the market also. Quentin had to run on us. He said he had to go back to work. Let's go to our next opportunity, which will be pound USD. All right, so looking at that, you can see the fractal level. No change yet. All right, so this is the level I'm looking at, 125.488. I'm looking to short that level, but I don't have a sign yet, but I have the market drop and came back to my level. Don't have a sign for that yet. If I go to 4 hour, you could see I still don't have that either. And these were both indecision candles, so no entry there. So we'll wait for it on the 4 hour. If we don't get it, what's going to happen is the market's going to move up to this zone. And that's where you're going to get another opportunity to trade it short again. But I pretty much think I would just look at this 125.488 level and see if the market's going to short here, because so far it hasn't given us that sign. So 4 hour, we know next 4 hour candle could be, the next 4 hour candle could be a strong sell. All right, so we have to watch for the next candle close at 9 o'clock. And it's going to open right here. And that's a strong buy. Well, not a real strong, but the candle's big. That was kind of a stronger buy, but you got a teeny wick, which won't mean much. Stronger buy here. And the market still moved high. Strong buy still. It may weaken. We'll see. If it doesn't weaken, it's going here. But at this point, I'm looking to short right here at 125.488. Now, when I play the level, don't think that I'm playing exactly that level now. What I'm doing now is waiting for a sell signal. All right, in this area to short this below this level. And I may enter here, which would be I'm above that level, but don't be so stuck on the level. The level is the area that we're looking to trade. So if we were using Ichimoku analysis, time analysis, we enter the market based on time. We don't enter the market based on a signal like that. So we know our level. We know what we're waiting for. We're going to see if we get it. If not, we just move here. So that's what I'm looking for pound USD. I don't think you're going to see it. Well, we have to watch the next candle. So probably 9 o'clock, you could look at this and make sure. You may be having an entry there. All these that I'm looking at, I'm going to update with the entries if they do develop. So New Zealand dollar, US dollar, I'm looking to short this, but this market may be trending to the upside. But what I'm looking at is we were in this zone here. And also, why didn't I make it there? Why did I do it there? Let's see. All right, so I'm gonna watch this. I think we can short this because we're kind of in a range. So I'm looking to see if we're gonna bounce in this area. So I made it into a small zone. This is the lowest part of the entry. This is the highest part of the zone. So we may see if we can short within this area. If not, what's gonna happen, the market breaks out of this. And if you're gonna trade breakouts with Heikin Ashi, we'll talk about that another day. All right. And when there's no clear trend, then that means you do nothing, right? Basically. but you still look at levels because the market's going to show you stuff at levels. So there's no clear trend here. There was a clear trend here. Then you could see indecision, then starting of a new trend, but we're at a level. So if we're at a level, maybe the market's just ranging here. So we're going to try to short this level back to here again. So that's what we're looking at this point. And when there's no clear trend, you do nothing really with these candles. It's how it keeps you safe. But I found a spot where I'm looking to short because of support and resistance. So let's go to the next. And we're not ready yet. I didn't look at 4 hour with this. See, we could have been short here, but we weren't off the level either. We would have been short here, and then the market's still moving higher. So let's see what's going to happen. Next 4 hour candle, we'll see. Let's add Ichimoku on this one real quick so we could do some analysis. So all the ways that you want to trade Ichimoku, let me show you. I can show you really quickly. So first of all, you want to follow the direction of the TK crossover. I got my crossover. When I got my crossover right here, I got a sell signal right there. I could take that sell. Now, if there's no more sell signals, I wait for the market to come back to my level, right? Which would be Tenkan-sen or Kijin-sen. Here it came back to Tenkan-sen. No sell signal, no sell signal, no sell signal. And then I can't see that candle real well, but that is a sell signal right there. See? So you sell the market right here. You're in a downtrend. You're following the TK crossover. Crossed over, you bounced on Tenkan-sen. There's no, everything is clear right here. We rejected this level. We don't put our entry below the rejection candle as we would normally, because we could also get better entries if we just play the candles the right way. The next sell entry is right there, pretty much where that rejection is. And then here's a strong sell right there, and a strong sell, and a strong sell. Strong sell, getting weaker, still a little strong, getting weaker. Strong, strong, and then indecision. You are out of the market right there, here at the latest. All right. This is more indecision. You want to be out here or here. So you would have gotten in off of a fractal bounce. I mean, a Tenkan-sen bounce here, and you would have got out the earliest there. So you could see where you got the profit. Made some profit, would have been not too bad of a trade. Since it's a daily time frame, you get about 130 pips or so, 125 pip profit. The market comes back to Kijin-sen. And it crosses Kijin-sen, but you still got a TK crossover that's bearish. Follow the TK crossover. The first sell signal is right there. All right. And then the market stays with it, and especially the angulation. Had you not entered the market here, if you would have saw this and entered here, I wouldn't have been mad at you, but you got to still have your stop loss above these levels. And then you could see the trade works good for you. I always tell you, when you get angulation like that and they're together, take that trade. But see, this trade basically bounced off of Kijin-sen because it came back, bounced here, gave you indecision, then it sat above here. Here you would have been thinking, well, maybe we're going to bounce off Kijin-sen to the upside. Here's what should have made you know that you're not. First of all, you still had a TK crossover that was bearish. Your future was still bearish. Everything was bearish. You look for the next short entry. You close back below Kijin-sen, also with a sell signal from your Heikin Ashi candles. All right. Now, again, I would look for a sell here, right there, and I would have sell. The market didn't give me much. I don't probably make much profit. Then the market gives you a TK crossover that's bullish. And this was your entry. Now you want to wait for your bounce, right? So you're waiting to bounce off Tenkan-sen or Kijin-sen. So now you wait. To me, and also you trade the zone, okay? I'm not going to get too deep into this right now. But when we crossed over and then we cross right back. I wait for the true sign to show me I got a TK crossover with a strong buy signal. I probably don't take that trade. But now when I'm inside my TK zone here, now the only problem is that I see the market a little bit. But when I'm just trading this zone, so you're trading this TK zone here, you got a strong buy signal right there. And your stop loss below the last low. You got a strong buy signal here. Is there anything on these candles that isn't telling you everything clear cut? You shouldn't have any contemplation. All right. So your mentality should be a little easier. Your patience should be a little easier. Your discipline should be a little easier. Your confusion should be a little less, because now all these things can help you out. All right. So that's what we're looking at with New Zealand dollar, US dollar. I'm going to take Ichimoku off the table. I just showed you quickly how you can look at some of the trades off of the same thing. I'm going to show you a couple of examples again, but let's look at the end of the markets, New Zealand dollar, USD. Also looking at this one. I'm out of this one. I'm not thinking about this anymore. I'm now waiting for this to get down to the level. Actually, it could bounce off of this top here. What I was looking at was a bounce here. I mean, a break here. And I wanted to explain a break here, because when you're trading these breaks of levels with these bars, if you see a big, strong bearish break like that, that's usually a good sign, and you probably can follow that all the way down. Now, what you also can do is go to the 4 hour. You got the break, and then go to the 4 hour and wait for the correction, and then the true another signal, which would be here. So on the daily, you got a strong break, which is there. All right. And then the next candle opened up at the midpoint. Now what happens is, if this candle doesn't go any lower, next candle is going to open up right here. All right. And then you're going to slowly lose this level. But when you see a big candle usually on a break, that's a good sign. But I don't trade breakouts. So I don't really have that trade, and I don't think this one is either. I don't think this one is. Actually, we're late on this. Daily time frame, we were looking at this. Oh no. I marked it. I didn't mark it properly. Right there. We broke below. Buy signals right there. A little far from me, because I would have wanted to go to the 4 hour. Daily, you can enter the market right here. This is an indecision candle. Too big of a wick. Too big here. This is a strong sell signal right here. If it closes today, your strong entry would be right there at this point. Let's see where the true market is. So this is where this is telling us. Let's see where the market really is. Let's see how far off we are with this one. And the true market is right there. Not much, right? So when we go back, you could see, actually I'll put it right on that edge, and you could see not much of a difference on this one right here. All right. So the true market is not there, but the next candle that opens is going to open up about right there, midpoint. All right. But the true market may be, when that opens midpoint, could it be anywhere in here? But you can see we weren't that far off. So to me, that's not a major distraction at that point. What takes it out of the realm is a big move, a big strike, a big spike. So the next candle should open midpoint. The market can still continue moving higher. This would be your entry at this point from the daily time frame on the US dollar Mexican peso. You shoot for these levels. You still can use everything that we talk about. You haven't broken any bear fractals. You're still looking to go long. You would probably start out down here, but you could definitely start below this candle because it's big. And you're playing the average now, so you can start below this candle. All right. Now, I like to go to the 4 hour. 4 hour would have given me my long entry right there. All right. And I'd been in the market already instead of up here. Well, actually, no, we're not even this. Yeah, this would be our daily entry. Let me go back. That would be our daily entry if we closed now. But if you went to the 4-hour when it got to your level, then you saw this was a buy entry. All right. This was a strong buy entry, strong buy entry, strong buy entry. So even if you were afraid and waited, you would see you still got the strong buy entries, and you could have at least been in the market here. All right. So it's going to show you what the market really is. It's not going to show you confusion. There's no confusion here. There's no confusion here. This is indecision. All right. So nothing to confuse me with the market. Are you confused right here? No, it's indecision. It's not doing anything. Wait for the market to tell you what it's doing. There's no decision right here. So that's how easy it can make your trading. Let's look at these last two, and then I'm done. BTC USD, I'm probably not going to look at much at it because it's not going anywhere at this point. I've got levels where I'd really look at it. The lowest level I look at it is right here. It's a 4-hour. Missed the bounce because it didn't quite make it. Kind of missed it a little bit. But it had I'd consider this a weak buy signal. A little bit longer, I wouldn't. That's kind of a weak buy, but getting close to a indecision candle. Just because the body's a little bit thicker than these bodies, and the wick is getting longer. And even though it was a weak buy, you could see the market got weak. Then here's the weak buy. The market eventually gave you some strength. Okay. I don't see a trade opportunity. I see the market heading basically up to near this level at about 98, 95, 35. Is there a way I can get in the market prior to that? I can stay with this 4-hour and look for the fractal bounces. So the next fractal I'm going to mark would be this one. And then wait for a bounce on this level. It may break it small and then come back quickly, then enter the market long, because you're trying to get that trade up to this level. You may be able to get that. And I think we're going to see Bitcoin, US dollar get to that point. But it's going to take a little bit of time. But it's trending that way. All right. Last one I'm going to look at is this XRP. Let's go daily. So I've been watching this a little bit. Strong candle, very strong candle. Next candle is going to open up midpoint. We want to see if in this zone it gives us a sell signal, because if it does, this run is over with. All right. I'm not looking to go long on XRP right now. If I was a trader at this point, I would wait, because I think we still play in this zone for a short. Then I'm going 4-hour. I didn't get that short signal yet. I did have a signal here. Would have dropped a tiny bit and then stopped me out. So now I'm just going to wait on this. If this decides to break through, where could it go to? I'd have to really look at the levels. But this could be the next level for this. But prior to that, we may see this level. Yeah, somewhere in there, around this point. So we could see this XRP get up into this area. So I would probably make it into a zone and put the lower point right here. So we'd break through here and get to this point. We haven't closed above this level yet. So I want to wait and see if we do, because if we don't, I'm going to look at the 4-hour time frame and probably see this drop to the downside. All right. So clear cut tells me everything. Still strong market to the upside. Let me see what the next candle tells me. This keeps you pretty good. You want to see my analysis on ETH USD. I'll go to it. So basically, Ethereum, USD. Let's go. We're on the daily. Let me put Ichimoku on here real quick. All right. And then let me move this zone over. So we had a support and resistance level here. And then I think we have another level. I'm off the level. You see why I put it there. Okay. So let's move this level to this zone right here, because what it does is lines up with this area. This is where we are. You might be finding weakness to get through this point. So 246.92, that area right here, you can make it even a little bit in there. 247 area. So basically, be careful here. There's still a strong buy here. All right. But my thing is, you have a resistance level. You want to see what these candles are going to show you, because you're never going to really miss a trade. If you're not in the trade now, then no need to get into the trade right now. What you want to wait for is see what's going to happen at this level. At this level, you may start to see the market short. So stay with the 4 hour now and then see what you're going to see, because see, this was a strong sell here. But to me, you don't sell that market because you don't have a level. You're not trading a level. But now when you're here and you get a strong sell, maybe that level is more important now, so you do sell. All right. And if it's going to break, it's going to just break with strong candles. And then when you get a lot of indecision at this level, you probably see it drop. But if you get the stronger candles like you have one here, and if the next one is even then the next one, you still could wait for the retracement back to this 247 area before you get into the trade. So 247 is very important level. All right. At this point, don't do anything yet at 247. If you do, you're just being an impatient trader to get into a trade right there, because 247 is going to tell you a lot. All right. What's going to happen here? Either you're going to be able to get a short or a long at this point. To me, I see the short, because we haven't proven to break this level yet. But the third time could be the charm. We bounced off of it a bunch here, a little bit here. Here, are we going to bounce and stay? Each time we hit off of it, we drop pretty good. So let's see what happens now. All right. The market will tell you if you just be patient and wait. So you're long from 235. So if you're long from 235, you're good to go. So you're long from about right here. No need to get out the trade. That's for sure. Not yet. The market hasn't shown you like to get out the trade, because I told you still strong sell buy signals, but we want to be careful of that level, because even when we break it, you could stay with your profit. All right. But what you want to do then is, if you want to be really good and you already got profit, then now you got big candles, just follow it like this. Stop loss. All right. And that's 4 hour. If you follow daily, you'd be way down here before you even got in the market. Actually, right back where you got into the market. So you don't want that. But you got to get through this area. You can see it's a strong area right here. Couldn't get through it here. And now you're saying, well, if you're a trader, are you thinking you're going to get through there? Right? You shouldn't be thinking that. I wouldn't think you would think you're going to get through there at this point. At this point, I would be thinking, I'm looking for signs that the market's not going to get through here, just like it did here, just like it did here. And see, these signs, the end of the market here on daily time frame, terrible. This was a big candle. You wouldn't have been able to catch it. You would definitely go to the 4 hour time frame to catch these. And you could see you probably get an opportunity. I mean, there was your strong sell off of this one. Here it was kind of wacky, but this was your strong sell right here. And then if you stayed with that, you had a whole bunch of junk for a while. You never would have gotten stopped out though. You had a whole bunch of junk, and then eventually you would have made your profit. So hopefully you don't have to do it like that here. Hopefully we get a clear-cut sign of what's happening with the market. So I think you still have time. I think the market's still moving up a little higher. It's going to get up into this area. And then once you get here, wait and see. You got it on a Kumo breakout? Good. Let's put Ichimoku on there. You want a daily time frame? You got it on there, yeah. And now, see, the thing is, we got a crossover and another crossover and a flat cloud. We may be at a top. Let's do this. Whoops. Some divergence in here, right? So these are even levels we're hitting. We're not even levels here. We're dropping. So we're starting to see some weakness here by divergence size. So divergence is showing us weakness. And then another thing, let's keep Williams percent R here now. So we're breaking -20, but we're not breaking levels. We should be breaking levels. If we stay above -20, then that's going to signal we should be breaking some of these levels. If it drops, then you're going to start looking for your entry. All right, because even now when I add Ichimoku, let's go to the 4-hour. Do it a little bit easier here. Let me show you the entries. So let's go back to this first area. So you could see if you stay with both of these on your chart, sell signal, each and Williams percent R sell at the same time, you got a sell signal there. The rest of that is a little garbage here. Then another sell signal right here. But I keep saying these, but Williams percent R gave you a sell signal right here, but you got a sell signal on the next candle with your Heikin Ashi candles. And again, you wouldn't be using Ichimoku here. Let me hide that. You're using the support and resistance levels. So you're trading this level for entry there, a short entry there, which Williams percent R gives you. And then here, Williams percent R says get in short right there, the same as your Heikin Ashi candle. So no difference there. So now when you wait here, Williams percent R said short right there. Heikin Ashi did too. So now Williams percent R is saying long here. Heikin Ashi is too, but you're up against a resistance level. Let's see what we get. You might get an M pattern here because you need to break this. And if you don't break this, you'll see this drop. That's divergence developing in the market. You're going to see this drop. So be careful with your profit here. 247 is your profit right now. Might see that thing drop a little lower, and then we could get short. All right. This is being recorded, and it will be posted today. So I am done. Hopefully this helped you guys out. We had a good hour and a half in here. So hopefully some of this stuff you can use in your trading. I'm going to incorporate it every day now so that you get used to it. All right. So that way, if you want to use it, you can learn how to properly use it every day. Candlesticks are easy. So we already know candlesticks. So let's go to Heikin Ashi Candlesticks and stay with it so I can show you how those work. Candlesticks are pretty easy. We already hit that. We put the nail in the head with those. Let's go to Heikin Ashi. So we can trade Ichimoku, Heikin Ashi, fractals, support and resistance, and we're there. Now we can eliminate Ichimoku at times because we just trade our fractals off of the fractal bounce and the support and resistance levels, just like we do with the regular candles. So I'm going to stay with this. All right. So hopefully this helped you out. Do you have any questions? All right. I'm glad it was very insightful for you. I hope it helps you for future trading and help you to make some profit. Watch for me on Friday because that's going to be, if you're not in, then you won't get in because it's going to be over 100. 100 is max, and I don't think we'll have room for anybody after that. And you're going to really want to hear Mr. Paul Lingham because he was a professional trader, traded on traded for some very big companies that some big banks, traded millions of dollars. And he's going to tell you how he trades right now today for his own account. And I bet you it probably sound pretty much like what we talk about. All right, so don't forget to miss that on Friday, 1 o'clock. Until then, guys, we're done. Have a great one. God bless. So long.